Afternoon, everybody. We're going to walk through the concept of the square of nine chart, the square of nine wheel in this webcast. I'm going to give a little intro first about the wheel, and then I'm going to walk through some chart examples, and then at the end leave some time for questions. In a world that now more than ever is held hostage to the financial markets, it's really amazing to hear well-known experts pontificating about the quote-unquote reasons the market goes up and down. Almost all of this daily wisdom for the meaning of the market's movement is delivered from the perspective of daily news events. We're blasted with opinions. The S&P will melt up into year-end and be at 1,700 next year because Draghi is going to do whatever it takes to save the Eurozone. The Dow will hit 3,000 in 2 years because of deflation. Gold is going to go down because the dollar will rally off its safe haven status. Gold has held up well in the face of the dollar's advance since the beginning of last September, and this is a sign of strength, which will see gold explode when the dollar declines and the European crisis is resolved. So what are we to believe? Sentiment was ugly bearish in September, with Bull Gross stating recently that the cult of equity is dying. Is this a contrary signal, a buy signal, or wise advice from an investment guru that we should take to heart? This past August was the 30th anniversary of the bear market low in 1982. The market bottomed on August 12th in 82, and the new bull kicked off on August 17th. Bill Gross sentiment is reminiscent of exactly 1 year before, on August 15th, 1979, when a Business Week cover story headlined, "The Death of Equities." The more things change, the more they say the same. The thing about contrary opinion is that the crowd can be right for a long time. It usually takes a universality of opinion to define extremes in sentiment worth betting against. You can find any opinion in the markets to self-medicate a confirmation bias. Same with statistics. There's an old saying, if you torture data long enough, it will confess to anything. So what's the point of listening to all these opinions and hype about the daily movements of the market? Two things matter, time and price. They are the final arbiter. They are the Lennon-McCartney of trading and investing. The important thing to remember is that it takes time for the market to play out. Such was the case with the Business Week headline story in '79. It proved to be a good contrary signal, but Mr. Market did a good job of disabusing players that this was the case, as the low didn't come in for another year. The other thing to remember is that, at least in my experience, it is the mood of the market. It is mood that makes the market, not the other way around. The news breaks with the cycle, not the other way around. 1 year PE ratio in Amazon is 50, the next it's 250. It's the mood of what people are willing to pay for earnings, not just the earnings in and of themselves that count. What determines mood or psychology of market participants is another story for another time. But I believe that the psychology that drives the markets is derived from cycles and shows up in patterns and harmonics of time and price. That's what the square of nine wheel is about. W.D. Gann was a legendary name in trading who in early 1929 predicted the high and panic to follow in the autumn later that year. At the same time, he also forecast a buying point for July 8, 1932. How is that possible? One factor allowing Gann to do this may have been his knowledge that the sun lunar cycle is 1,040 years long. In the Bible, it says a day for a year. The September 1929 high, remarkably, was 1,040 days before the low in the first week of July 1932. In addition, Gann noted that July 6, 1942, so we're going 10 years forward, was 1,040 days after the start of World War II. The start of World War II was September 1st, 1939. The DJIA made a major higher low of the July 32 low in April of 1942 on the decennial cycle. So it's going to be interesting to see what October 2012 has in store for the markets, being 10 years after the bear market low in early October 2002. And also we're 5 years after the all-time high in early October 2007. Will it be another low like 2002 or a high? Since we've run up almost to new highs, chances are that the likelihood is that it's bound to be a high rather than a low. So 900 months from July 1932 low was the major primary high in July 07. This was the initial high with October 07, 90 degrees in time later, satisfying a test and a square out of time and price. And we're going to walk through that later and show exactly what it looked like on the square of 9 chart. 600 months from the July 1932 low was the major bear market low in the summer of 1962. I don't think it is happenstance that the first week of July ties to and aligns with the number 1576, the all-time S&P high. I don't think it's happenstance that the 768 bear market S&P low in 2002 also aligns or vibrates with the first week of July as well. So 768 and 1576, and we're going to show this on the chart, one of the charts later on, line up with 1576 being exactly 6 squares or revolutions up from 768. You'll see what these 6 squares look like on the wheel if you're not familiar with it in a little bit. And 6 squares represents a perfected square or a cube. So I thought that was an important square out at the time and led me to make a call for a top. From its October 11th, 2007 peak to the March 6, 2009 low is 512 days, or roughly 1/2 of the 1,040-day count mentioned above, I mentioned earlier. From the July 19th, 2007 major primary high, a 1,040-day count gives May 24th, 2010. The S&P scored a major higher low just days later at the beginning of, in June 2010, remarkably enough, near a price of 1040. The square of 9 chart showed that the number 666 squared the date of the low on March 6th in 09, and again, we're going to show that as well. The square of 9 chart also called the April 2nd, 1422 high this year. The important higher low this year, July 24th, aligns with this year's 1267 low. So where are we now? Well, 6 revs, 6 revolutions, or squares up from the big 666 low gives a price of 1430. Now, while the S&P has rallied well above 1430, oftentimes the market overthrows a perfected level by 90 degrees. So the advance from 2002 to 2007 was a precise 6 revolutions of 360 degrees. It may be possible that in keeping with the principle of alternation, that here in 2012, we may be getting a 90-degree overthrow. So in other words, from 02 to 07, you had a perfect 6 squares up. Maybe now, if we're finding a top, we're getting 6 squares up with a 90-degree overthrow. What is a 90-degree overthrow from that 6 squares up at 1430? Well, 90 degrees up from the previous high in April at 1422 equates to 1460. A 90-degree overthrow from 1430 equates to 1468, and the market found a high in this window roughly 2 weeks ago now. What's really interesting is that 1460 is opposite October 4th, and 1460 and October 4th tie to 741. Now, I'm sure you all remember that 741 was the crash low in 2008, and that was the low that was around the world. So 1460 vibrates up the major primary low on November 21st, 2008. Essentially, the move down into March 09, was, although it was sharp and deep, it was an undercut, and it was a short-lived undercut because the move below 741 only lasted for a couple of weeks. The square of 9 chart, or spiral chart as it's sometimes called, is the wheel of time and price, or the master time calculator. I know of no other tool that does as good a job as identifying major and minor turning points. So let's take a look at the first chart. Okay, this chart shows how 1576 in 2007 was 90 degrees or square from the October date of the high. You have to take my word for it. This wheel, this paper wheel, or digital replication of a paper wheel, doesn't go, the number grid doesn't go as high as 1576, and that's why I've marked on it that the next numbers up from this grid were 1275, 1422, which you'll all remember from this year's April high, and then 1576. And you see the 90-degree square to the date of the time, to the high that year. Let's take a look at the next one. Here, this represents the March 6th, 09 square out. Here is March 6th, and here is 666, 667. And there's a 90-degree relationship between the two. Let's take a look at the next one. I wanted to show, going back in time, how the pre-crash high in 1987 at 338, which is right here, is opposite August 25th, the date of the high that year. What's interesting is that the recent high, the recovery high off the 2009 low at 1474, is also opposite August 25th, and we're 301 months later right here, which basically aligns. So you see this vibration now between, and the harmonics between that relationship. I'm not saying we're going to crash, but I'm saying that if we break support and we accelerate, the vibration exists. Let's take a look at the next one. This is the recent high in April 2012. 2 squares up here is 1422, and you can see that it's square the beginning of April, and obviously April is opposite on the calendar, 180 degrees from October. So the April high also vibrated off this October, first week of October, early October period, which we're coming into right now. So we're also roughly 180 degrees from the October high. Let's take a look at the next one. Last year, the low for the year was made on October 4th at 1074. Here's 1070 down here, and October 4th, and you can see a 90-degree relationship. So the market is not a fine Swiss watch, but 1074 and 1070 are close enough for government work. Let's take a look at the next one. Let's take a look at the stock. The square 9 works just as well in commodities, indices, and individual stocks. Apple scored a big high at the end of December 2007 at 203 in 2007. So here's 203, And as you can see, it's late December. I'm sorry, here is 203, and it squares late December. This number here is 352, and 352 ties to the big 354 low, which occurred last October. And you can see that these relationships, these vibrations move forward like a ripples caused from a stone or a rock thrown into a lake. This same vibration here played out again early October. Over here, squares 352, 354, and is opposite that major vibration from the end of December in 07 at 203. And here what I wanted to show is, here's the big low in 2008 at $78, $79. And this is this vibrates. That low vibrated off the third week in November, November 21st, November 22nd that year. So these harmonics of relationships in time and price can either vibrate off the same vector, be lined up like this is, or they can be square like this, or they can be opposite. In other words, a date here and a price here. They can be opposite. So the thing to remember is that in using the square of 9 or the wheel is that price can call price, the relationships from one price vibrating off a previous higher low. Time will vibrate off time, and prior anniversaries will vibrate or relate to new highs and lows. Or time can call price, and price can call time. So there are various ways where these geometric relationships will play out. The thing that I have found that's most interesting, as Gann used to say, every square out is a high or a low. Every high or low is a square out. But not every square out is a major high or low. It's like saying every trend line break is a major breakout, or every trend line break is a major breakdown. It's the ensuing behavior, it's the ensuing price action that you need to confirm. Follow through is key. But what I found that's interesting is that when you get a perfect square out, such as the October 07 high with 1576, or the 666 low in 09, in March with the March 6 low, is that when you see those square outs perfected and price run into them and hit them solidly, that it usually is indicative of the significance of that square. When they kind of dawdle around, or they back off a little and then go higher, that's kind of the market tipping its hat, or the geometry tipping its hat, that you're not dealing with a major occurrence. And I think we may have one or two more wheels charts to look at. Let's take a look at the next one. Yeah, I think this last one. This is an interesting one. It shows from the 768 S&P low, which is here, in 2002, what we were talking about earlier, the index advanced 6 revs, or 6 of these squares, to 1576. So here's 768. You've got 1, 2, 3, 4, 5, 6. 6 squares of 360 degrees for a cube. This is how you square the circle. Let's also note that 768, as we showed before, squares the October time frame right here of the low. You've got a 90-degree square there. And also I want to point out how the November 08 low, the crash low at 741, also vibrates off that early October period. So here's a case where 741, you're at this, imagine now going back in time, we're in November, the market is crashing, it's at 741, you're looking at your wheel, or you're looking at your paper wheel, and you don't see anything that lines up with 741 in November, but we do know that the early October period has been a major anniversary of important highs and lows in the prior decade. So the fact that 741 resonates right in here, resonates off the first week of October, and the market stops, and you see it start to turn up, and maybe you see the three-day chart turn up, and the weeklies turn up, and the action improving, tells you that you may have a vibration occurring. So again, now here in 2012, the S&P has advanced, as we were talking before, 6 revs or squares up to 1430 from the 666 low. And what's interesting is that this 1460 level, which we think is important, is opposite October 4th, which we're coming right up on this week, and 741. We don't show it here, but 1460 is 2 or 3 grids out, 2 or 3 squares out from right here. Okay? And I think that's the last chart we have. And it's taken me many years, actually, to kind of create and fabricate a physical wheel. And I've finally been able to accomplish that. And actually, the first wheels are in, and they're 2 feet by 2 feet with a clear plastic overlay that spins around the number grid that you saw before in the 2-dimensional version. And that basically allows one to easily make these calculations and the same kind of turning points the way W.D. Gann did. During his prominence in his heyday, Gann gave many courses on his methods, some of which sold, and this is in the 1930s, for the equivalent of the price of a car, even a house. What's worth knowing is that he never gave a course on the square of 9. He talked about it, but I can't help wonder what the value he would place on the square of 9 or a physical wheel, a square of 9 course or a physical wheel, since he never gave a course on it, and he never had a physical square of 9 wheel to sell. I think all that Gann probably ever had was a paper wheel. In fact, in some of his papers after he passed away, they found a paper version of the wheel with pins in it and pinholes in it. So he probably did have some kind of an overlay, and that was the purpose of the pins, to hold it together and to spin it around to market. So if this is something, if you're serious about the markets, this wheel is something you do want. It'll pay for itself many-fold over. If you are interested, just email the address shown. And the wheel comes with, I am going to do a course on it, but I've just gotten the wheels in early September, and I decided to let them out when they were ready. I will be doing a course at some point, but in the meantime, the wheel comes with a half-hour phone consultation. And so if there are any questions, this is a replica of picture of the wheel, so you can see it's very user friendly, and you see that it's got the square, the triangle, and the hexagon, and that spins around the dates of the year. You spin it around, you put the first point here, 0, on your date or your price, and that's how you can easily find the relationships. Do we have any questions, Mike?
Yeah, we have a few questions. Thank you, Jeff. That was very informative. I know I always had some questions about the square of 9, so it's very helpful for me. But we had one question about the square of 9 and Gann theory. Do you think that it's better at predicting big market movements, or is it better for individual stock movements, or is there no difference?
It was a little difficult to hear you, but I think it's better to predict big market movements or major turns, or smaller turns off individual stocks?
Yes, if Gann theory and the square of 9 were better for individual stocks or the macro space.
I think it works. Equally well off both, actually, for major or minor turns. For example, just recently, Apple made a high at 705, and as we showed on the Buzz and in alerts on MV, 180 degrees down from that high coincided with 652, 654, and it made a low there yesterday, and in the late runoff rallied up and left a nice bottoming tail at that level. So that's just one example. I think 90 degrees down was 679, 680, and it bounced off that initially, undercut it, accelerated down to yesterday's lows, and now it's going to be interesting to see what action plays out. It looks like it wants to test its overhead 20-day moving average, which is right around that same level at 90 degrees down now. So I think it works off both equally as well.
Okay. Have another question here. Do you use only 90 degrees when you look in the square of 9, or do you use smaller increments like 45 and 30?
I don't use 45 or 30. I know some people do, but eventually you can draw enough angles or enough lines that you're going to get overwhelmed and everything's going to look like a setup. So me personally, in my experience, I found to keep it to 90 degrees, to 70 degrees, 120 degrees, I use occasionally, but basically those increments of 360, the big 90-degree increments.
Okay. We have another question here, and when you're looking at a 90-degree square from date or from time or price, would you look anywhere within the 90-degree line for the new price or for the new time?
What was the last part of it? Would I look anywhere what?
Would you look anywhere on that 90-degree line for the new price or for the new time?
Well, what I do is I line up 0. First of all, what I do is every day when I come in, I'll put 0 on that date and see if there's any relationships which will show up. Because every time you look at the wheel, new things, new secrets. It's revealing things all the time. It's like a living, breathing calculus. So I'll put the 0 on the date and see if it is close. If it's close to any numbers at the S&P or any stock I may be trading. See if it's got any harmonic, any relationship to any numbers that are squaring that day, for example. If that answers your question.
Yeah, that should answer the question. The person who asked that can, I believe it was Paul, if he can send me another question if that answers it. I guess the next one, the question is, if the S&P breaks through that window, I know you talked about October being a big window for the S&P to top. If it breaks through there, how would you look at it, with different time and price?
If it breaks, if I understand correctly, if it breaks through to the upside, say out of this 1460, 1468 level, then I think there's a better than average likelihood that it probably wants to test the all-time highs, if not exceed them. On the flip side, if it breaks with authority below 1430, I think it'll probably have a quick plunge down to 1370, which is 2011's highs, and we see what it does from there.
Okay. Now, do you have any basic principle for how you look at Gann theory and how you use the square of 9 chart every day?
Well, I don't have nothing that that's like a book unto itself. But let me just say this: the circle is squared by beginning at 1 in the center of this wheel, and you go around and around until you reach 360. The square, the 9th square, comes out at 361. Hence, the square of 9 squares the circle or cycle. So what the square of 9 represents is beginning and ending points. The math is proved by going 9 squares out, gives you 361. Also, what Gann is famous for saying, one of the things he always used to say was that if you can find 0, you can measure anything. Gann's belief is that March 21st, or the spring equinox, was the beginning of the year in 0, and it's very hard to see on here. But on the right side, on what they call the cardinal cross on the square of 9 is simply those points that are due north and due east-west. And so 19, there we go, 19 is right around here and aligns with March 21st. And again, 19 squared is 361. The whole concept of the square of 9, you asked me for the whole concept is basically, this is a way to measure price movement logarithmically rather than purely linearly as a price chart will do. That's the concept behind it. Why it works, I don't know. Maybe the human brain is wired to see things in these geometric spatial relationships. That's not what this is about as to why it works, but it works.
Okay. And the last question, if anybody else has any more questions, just send them in. The last question we have is, do you use smaller measurements for lower price stocks, stocks that are under $10, things like that?
That's a great question. I've never really used this with stocks under $10, and I know some people believe that they move a decimal point so that a $9 stock, it would make a $90 stock, and that they can get accurate projections that way. I've never really worked with this with the very cheap stocks.
All right. If you have any more questions, please send them in. Otherwise, thank you, Jeff. That was very informative. And if you'd like to purchase the package of the physical square of 9 chart and a phone consultation with Jeff, just send us an email at cooper@minionville.com. Don't see any more questions.
All right. Well, everybody, thanks for attending, and I hope it was helpful.
Thank you, Jeff.
Thanks a lot.